You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back once again, one day early. A little bit of a special early edition of the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging, including all of you who joined us for the first time last year for the Futures Rundown. Welcome to all of you folks. Remember, if you want to keep the party going, including immediately after this show, you want to dive in with a little bit of great pro Q&A action, only one place to go. theoptionsinsider.com/pro is the place to go. Get access to the pro Q&As, options, oddities, giveaways, all sorts of fun hanging out over there in the pro land. As we see who's hanging out with us this week on the Futures Rundown, I'm pleased to welcome back our old pal for the first time in 2024, Mr. Dan Gramza from Gramza Capital Management. Mr. G, welcome back to the Futures Rundown, and Happy New Year to you, sir.
Well, thank you very much. I'm looking forward to exploring these markets with you, Mark. We've got an interesting year, and 2025 seems to be a market a marketplace that's going to have a lot of interest, I think, fundamentally and also technically.
I don't care that Larry David says the cutoff for Happy New Year is 3 days into New. I'm doing it 3 weeks in, Dan. We write our own rules here on the Futures Rundown.
Totally agree.
As we keep on rolling into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, listeners, let's get down to business on the trading pit. And Dan, before we talk about what's lighting up our tapes this week, as I mentioned, it is your first appearance here on the Futures Rundown for so far what's been a pretty wild year of 2025. But let's start taking a few minutes looking back Obviously, 2024, a pretty wild year as well. From a futures perspective, sir, as you look back on 2024, what really stands out and resonates to you?
Well, I guess, excuse me, see, it chokes me up thinking about that. Uh, when I think about it, we have a few markets that trended in a way that we really wanted to pay attention to them. So when it comes to the stock indices, the Dow movement, the Russell, I found very interesting. If you look at currencies, the dollar's strength, I think was really something to pay attention to. So if you look at the euro, the Swissy, Mr. Yen, Aussie dollar, Canadian dollar, British pound, they all had a unique story, even though they reacted a little differently. So I think the US dollar was very interesting over this past year. We saw a little spurt in Bitcoin, which made that market interesting. Yields really revealed themselves when it comes to 10-year notes. We saw a strong downtrend as yields were going up. That may be changing. Same thing in 30-year treasuries. I think that was interesting. I also think that the gold didn't really perform as a lot of people were looking for. Same thing for silver. But one metal that is kind of waking up that I think we should pay attention to that wasn't really that great in 24, but it may be good in 25, and that's copper. Crude oil also had a nice trend going as we went into the end of the year. Nat gas didn't perform as people expected, I think, in 24. But the markets that are really perking up, and we can talk more about that, are the grains. I think there's some interest in terms of what's happening in those markets, even though they didn't really perform the way people were expecting in 24.
All right, a lot to unpack there as we shift our gaze to what is lighting up the tape this week, listeners out there, and kind of a bit of a sampling, a bit of something for everybody on the docket this week. Let's start in the green column. Let's keep things optimistic to kick off the new year, unless, of course, you're heavily short these, in which case you're a pretty angry customer right now. Number 5 in our top 5 most active for this week, listeners, we're going out to equity land. It is the Russell 2000, up 5 1/3%. It's been a banger, a wild start to the year on the equity front. We're selling off to start the year, giving up all of the post-election gains. Then we get a lighter than expected, less hot than anticipated inflation number, and bam, all those gains right back baked into the market. S&P back north of 6,000 again. So it's been a wild time, and a lot of that baked in also to the small caps as Russell 2000 coming in. Number 5 this week, up 5 1/3%, right above it, just barely managing to eke it out. 5.37% for the number 4 spot is cocoa. Again, cocoa had a wild year last year, was giving up a lot of those, not a lot, I shouldn't say a lot, 10%, that sounds like a lot, but when you're up nearly 200%, you could shed 10% and not really shed a tear. Getting back 5 1/3% of that this week, coming in at number 4 is cocoa. Number 3, listeners, we're off to crypto land. It is ETH, the micro and the big futures, both having a banger week, up 7.5%. Again, Ether, it could use some catch-up. It was giving up some of that luster, and of all the major crypto assets, Ether is clearly one that it can stand to shed its gains the least, let's just say, given all the narrative swirling around it about how it's losing some of its luster. It's not keeping up with the other big coins. So good to see Ether coming in number 3 for all the Ether bulls there. Number 2, we go off to the ags. It is oats. Oats up nearly 9% this week. Man, a banger week for oats. 8.87%. to be precise. And the number 1 size upside mover this week, listeners, you can probably guess if you've been paying attention. You also know what transpired this week. Of course, we had the inauguration, Trump moving into term number 2, not consecutive, but term number 2 nonetheless. Of course, that's been big for the crypto market, and Bitcoin showing a lot of that luster this week, up nearly 13%, 12.92%. to be precise. So, Dan, a banger week to the upside. Well, what's catching your eye out there, lighting up things green this week, sir?
Well, you touched on a few of them. I mean, if you look at Bitcoin, that's a market that really did uh, get some gas poured on it as we look at that. The idea that the administration may be friendly, we've seen some meme coins, tokens that came out this week for Trump and his lovely wife. So there's this mood of friendliness to that sector. And some of the cautionary action that we've seen in the past seems to have changed. So I think the Bitcoin market is really one to pay attention to just because of the acceptance of it has changed. It's still the same entity, it's backed by good intention. But the fact is, it's getting some market acceptance that it didn't have in the past. So I think that's worth paying attention to. Excuse me. We're also seeing some weakness in the dollar creeping in. So the currencies, I think, are positioned for some movement to the upside if that continues. So I think there's some upside potential there. When it comes to interest rates, the bond market, I think, also has the ability to give us that push up. It seems like yields are coming down, so that's one to pay attention to. Gold is a market that wants to go higher, but we're not seeing consistency in terms of behavior. Crude oil also is one that the expectation is that thing should be taking off, but we're not seeing that. So if you're thinking about the long side because of the way it's behaved over the last few months, we may not be getting that. And I know the intention there is very positive because we hear of drill baby drill by the administration. But there's a lot of lead lag when it comes to that idea to reality. And globally, right now, we have a lot of crude out there. So I don't see that changing overnight. So I'd be cautious in that market. But those and the grains, there are some fundamental drivers right now. We're seeing it in beans, corn, and wheat. And I think there's some upside, further movement in those markets. And it's definitely something to pay attention to.
All right, Dan. Now, if you're lactose intolerant like me, you might want to watch out for the bottom five here this week, Dan. A lot of dairy lighting up our red on our screens this week, listeners, including number 5. We're going out to cash settled cheese off about 4.5% this week. So no love for dairy across the board. Number 4, listeners, if that's not enough for you, how about some cash settled butter? Also giving up the ghost this week, off nearly 5%, 4.91%. And then coming in at the number 3 spot, completing the dairy trifecta. I'm feeling uncomfortable just looking at this list, listeners. We got Class 3 milk off 5.1%. I need to pop a Lactaid while I'm hosting this show. Number 2 to the downside, listeners, it is sugar, the number 11 variety, coming off nearly 6% this week, 5.87%. And then number 1 to the downside, again, take this one with a bit of a grain of salt. It is a future, so it is moving this much, but I know a lot of vol traders, they grimace when they hear percent of percent in terms of VIX. Yet nonetheless, that is our number 1% loser this week. Vol giving up the ghost after that inflation number last week, off about 12.5% in that Feb future in VIX. So a wild time. Dan, I hope you're not lactose intolerant like me. What's catching your eye to the downside in our list this week, sir?
No, I like those dairy products, actually. It's friendly to me.
You can have it all for me, sir.
Yeah. Well, I think the VIX, you finished with that one. I think when I look at it, it's logical. And it's logical when you think about we're talking about the S&P 500. And if you look at what's happening in the underlying, it makes sense that the VIX is soft. So I think it's doing what it should do. And I'm just not bullish on that particular market going forward if you're bullish on the stock market, which I am. So I really don't see anything unusual in that market. We've had some volatility, as you know, over the last few weeks in that market. But I think it's doing what it should do. But what's interesting, Mark, right now, it's approaching levels that we've seen buyers come in before. I mean, if you go back to like the early part of December, we were around 16 or so. And that's when we saw buyers starting to come in. The difference this time is the way we're getting here. In December, we slowed down. Right now, it's kind of violent to the downside. So even though we're at those levels, and I do think we should pay attention to that as a potential for a move to the upside, it's the way it's getting down. And they're selling it with both hands. So it's not a market that I look for any kind of recovery with that structure in place.
Well, I'm glad you mentioned VIX, Dan, because I am going to ask you a little bit later for your end-of-year VIX prediction. So just start mulling that over now. I didn't want to throw it at you out of the blue. Start mulling it over now while I start running down some of the top 10 most actives out there for today. What is lighting it up in the futures market as we're recording right now, listeners? Number 10, we're going out to the rates. It is the 30-year, 378,000 contracts on the tape. Number 9, a lot of talk about the dollar and FX post-Trump inauguration. What does his presidency mean? Obviously, we have tariffs, a lot of things going on the FX scene. So the euro coming in there at number 9 today, 453,000. Number 8, energy also very much in the crosshairs. What's going on in the Middle East? Drill, baby, drill. All these narratives conflicting and conflating at the same time out there to get crude oil to number 8, 490,000 contracts on the tape right now. Number 7, going out to our old pal, 3-month SOFR. If this product intimidates the hell out of you, A, you are not alone. B, go check out the deep dive we did on this show not too long ago, an explainer on all things 3-month SOFR. Number 7 today, 536,000 contracts. Number 6, to the realm of equities we go. It is the NASDAQ, 549,000 contracts on the tape for the NASDAQ E-mini. Number 5, back to the rates. It is the Ultra 10-year, 602,000 contracts on the tape. Number 4, keeping it in the rates. It is the 2-year, 739,000 contracts. If that's not enough rates for you, don't worry, we got more. Number 3, it's the 5-year note, 1.02 million contracts on the tape for number 3. Only to be outdone by number 2, the S&P 500 E-mini, 1.3 million contracts on the tape on yet another wild day out there in the equities. But what can top them all today, listeners? That's our old pal, the 10-year, once again coming in, the king of the roost, 1.82 million contracts as of a couple of minutes ago out there, listeners. So a hot day, Dan. A lot of the usual suspects in our top 10. We have, of course, the E-mini, the 10-year, the 2-year, the 5-year, all that fun. But a couple of other ones maybe popping in there that might be a little more surprising. The euro and crude oil certainly spring to mind. Anything catching your eye in that top 10 today, sir?
Well, I think the yield side does make sense because of the expectation of a new administration and the expectation for what the Fed may be doing going forward. So that's, I think, logical in terms of the movement that we're seeing and the volumes that we're seeing. I also think that the euro makes sense. If we think about what's happened with the dollar this year, is that going to change? And if you look at the action that we're seeing in the euro as of today, buyers are coming back into that market, which does imply a weaker dollar going forward. So I think that one fits. Crude oil, well, we got some volume there. We are backing off a bit in that market, and we've got a global situation really when it comes to crude that's changing. It's changing in terms of who's participating and how they're doing it. We're seeing further sanctions on Russia, their ghost fleet. That's a big deal for Russia because, whenever we have sanctions, whenever we have tariffs, countries do their dance around them. And that's what we've seen with Russia. And the way they do it, they put it in a tanker that's owned by who knows who, or it's in some obscure country registered there. And once crude's on the water, which is what they were doing, and they start moving it, it's really hard to track that crude, and especially when it becomes refined. So that door has been closed a bit for Russia. And you would expect crude oil to kind of respond to that. But so far, we really haven't seen, I think, the response that people are expecting in crude oil. So some action there, volume-wise, I don't think is too surprising.
Well, it's not surprising to me, listeners, because I said it at the end of the year last year, but maybe it's surprising to some of you, is the fact that these markets are just coming out of the gate hot to start the year. People have this perception that the first couple of weeks of January, kind of a sleepy period, not much happens. That is not the case. In fact, we're seeing some of these products already exhibiting pretty much a full year's worth of action and movement just in the last couple of weeks. Let's do a quick catch up on what are the hot year-to-date movers right now, because this is kind of fascinating in and of itself. Again, we're only 3 weeks in, listeners, already. We're getting hot and bothered in some names. Let's go to the light side, a.k.a. the green. First, listen, we got nat gas already up over 8% to start the year, about 8.2%. Maybe that one, not that surprising. Nat gas, very seasonal, and we are in the midst of a nasty cold snap right now. So probably some of that come into play there. But either way, nat gas coming in number 5 for the year right now. Right above it, again, maybe no surprise when you look out your door and look at the thermostat, listeners. It is heating oil up 8 2/3% so far year to date. Number 3, you can probably guess, we just talked about it. It is Bitcoin, up nearly 13% already this year, 12 2/3%. Now, you know Bitcoin, it can give all that up in a day and then some, so take that with a grain of salt, but still impressive moves. Again, as we see what the average S&P move is for the year, and you see what some of these products have moved already just in a few weeks. It is very surprising. Number 2, listeners, we're going out to the ags. It is soybean oil, up nearly 13% already this year, 12.86%. And the number 1 big dog gainer on the year so far, listeners, it's our old pal oats, up 13 1/3%. Dan, any of those come as a surprise to you as you see what's lighting up the new year? And are you like me now? You kind of brace for this because the last few years we've come out of the gate hot, and this year is no exception, sir.
I think you're absolutely correct. We're seeing an activity that people don't expect, and with the markets that you're going through there, the ones that kind of pops off to me, one, Bitcoin, because of the attention that it's getting. The other one, by the way, is soybeans. The soy market right now, the grains, so I'm talking about soybeans, corn, and wheat. If you look at the soybeans, I think there's some room to the upside there. And the reason is, if you look, well, you need to look at our friends in South America, Brazil. Brazil's the largest producer of soybeans. And what's interesting, Brazil's got too much rain now. They're having problems with their harvest, and that can affect the quality of beans. And then if you look at our friends further south in Argentina, they're having the opposite problem. They have dry conditions right now, so their yield may not be what people expect. The other thing that's happening here in that marketplace is, so far, the Trump administration has not imposed tariffs as people expected immediately. So that's kind of dampen some of that concern. We also have a dollar that may be getting a little bit cheaper. And the big deal really is China. China's a big consumer of these markets. And so now they shop like you and I shop, only it happens to be in big quantities and using countries. But they look at United States soybeans, the cost, quality. They look at Brazil, question mark. They look at Argentina, question mark. That's also favorable for us. And so far, they haven't been hit by tariffs that may cause some concern for them. So I think there's some favorable market conditions for that market, for that complex. So soybean oil taking off like it has, I think is reasonable because of all these fundamental factors that are at play in that market. So I like the list that you have here, actually. And I think that the whole complex that you went through, Mark, are ones that we want to pay attention to as the year unfolds.
Let's see what we're paying attention to. To the downside for the year, listeners, coming in at number 5. Again, back to the dairy. It is Class 3 milk off a little over 4, about 4.1% for the year so far. Number 4, we got our old pal Cash Settled Cheese. So it's the dairy duo, not the dairy trifecta, at least for the year, listeners, off 4.42% for Cash Settled Cheese. Number 3, listeners, it is lithium, not a contract we talk a lot about, even though I do believe we may have a question coming up about this later in our pro Q&A session. So stay tuned for that, listeners. Off about 4 2/3%. Number 2, again, we just talked about this. It is our old pal, the VIX, off 7.39%, at least in that Feb future. And the number 1 loser for the year, downside mover, call it what you will, it is sugar number 11, off 7.63%. Dan, any surprises there in our list of quote-unquote losers so far year to date?
Well, when it comes to sugar, the last one that you just mentioned, that's been in a downtrend. So really what we're seeing is the continuation of what we had in the latter part of 24. So I think that one is doing what we've seen so far that it's done. What's also interesting about the complex that you just went through is that it's not more to the downside. So yes, these markets are down, as you just mentioned, but it's not dramatic. If you look at the movement we saw coming out of the starting gate, like you mentioned, Mark, on the upside, that was volatile. These are double-digit percentage moves to the upside. All the ones to the downside, or most of them, are less than 5%. We had, the VIX was down 7%, and so was sugar. So we're really seeing a different action to the downside. And maybe this upside is kind of the guiding light that we can expect going forward for these different complexes. Lithium is actually very interesting because of where it fits in. And if we think about where it fits in, it's batteries. And if we think about the new administration saying, not against EVs, we're not against electric vehicles, but we're not going to mandate that you got to buy one. You buy whatever car you want. Well, that changes that perception also of demand. And I think lithium's a little bit of a barometer there that we can look at.
Yeah, kind of weird that Trump said that on the podium with Musk standing right behind him, a big backer of him. And he's like, the hell with these EVs.
I know, but the thing about it, he's not saying don't buy it. He's not saying it's not necessary to buy them at all. He just provides choice. And I think Americans respond to the idea of choice, the idea of competition. It's kind of the American way.
I don't know. Musk has done pretty well building businesses in the past that rely on, let's say, government subsidies. I think if you look at all of his businesses, they all are heavily subsidized by the government, with the exception of Twitter, which hasn't done so well under his stewardship. So I don't know. Kind of interesting to see that. Maybe the government pulling out the rug from under there. But we won't go down that rabbit hole, Mr. Dan. Instead, we'll keep on
rolling. No.
Keep on rolling into the world of our futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, listeners, welcome to your segment here. And Dan, I warned you at the top of the show, so hopefully you've been mulling. But we kicked off our questions of the week this year, as we always do, taking the pulse of our audience what they feel in terms of outlook for the year from a volatility perspective. Obviously, we just talked about VIX futures a lot, so VIX very much featuring on this program as well. And you folks overall are feeling a very spicy end to the year from a vol perspective. We gave it an overall spice theme, a flavor theme, if you will, to our poll this year, Dan. And about exactly a third of our audience, 33.3%, said the year is gonna go out like a ghost pepper, north of 20, very spicy in the vol realm, listeners. Folks feeling a little bit less spicy, but still flavorful. We got the old spicy habanero flavor, the range of 16 to 20 listeners. That came in a close number 2 with 32.4%. So obviously you add those two together. 2/3 of our audience think we're north of 16 to end the year, which is not nothing in a usually quiet period, December, end of December, usually not the most active vol time. So kind of interesting. And then we have the mild buffalo range of about 12 to 16, 29.6%. And then only 4.6 of you choosing the bland oatmeal category of below 12. And Dan, we also had a bunch of our network guests and co-hosts weighing in on where they feel VIX will close at the end of the year. Now it is your turn to play, sir. I turn the microphone over to you. What are you feeling for VIX's close at the end of 2025? If you want to play along with everything, if you want to guess a high and a low as well, you can. But so we just really need the close, sir.
I'm looking at that mild buffalo, and that's at 12 to 16% or 12 to 15.99. The reason is I'm bullish on the stock market. And I expect it to be reflected here in what we're looking at. So, excuse me, I'm not looking for a high number in the VIX as we finish the year out. So that one feels comfortable to me.
Do you have a specific number in mind? You thinking somewhere in the 12 to 13 range, more or less? What are you feeling, sir?
I would say 14 to 16%.
I'm going to put you down at a 15. How about that? Put you down right in the middle of the range. 15.
Yeah, done. Hey, you and I did this before, and I was trying to remember what I did say about the VIX. I don't remember.
Oh, your last year's prediction? I can bring that up for you. I don't think you were amongst our Hall of Fame inductees for the year, Dan. But you know what? I can find that for you. Give me 2 seconds. Here we go. What were you? You were at the end of the year. VIX closed at 1735, I believe, right in that ballpark. So we actually had one person get a bullseye, Steve Sosnick from IB. He guessed 1725. So he is our first inductee into the for the hosts and guests into our Hall of Fame. Dan, you were at 1155. So you were feeling you're actually a little lighter. So interesting.
Yeah. That is interesting. And well done, Steve.
Yeah, Steve hitting it out. I will say the next closest, Dan, yours truly at a 1697. I was the only other person who was even remotely close. Everybody else was over a handle off. So I'm dialing in my model, Dan. I'm getting there. Not quite within our 10th of a point margin of victory, but for a whole year out, I'll take a 0.38 away. Not bad at the end of the day, sir.
I totally agree. Well done.
Well, you know who really have it dialed in, Dan? It's our audience. So we asked them exactly a year ago on the launch of the spot Bitcoin ETFs. We said, hey, now that the spot Bitcoin ETF is finally approved, it's time for our annual sentiment poll. Quite simply, will Bitcoin close positive on the year? We all know the answer, listeners. It was a roaring success for Bitcoin. And over half of you agreed with that. 56.7% said, heck yes, Bitcoin is going to close positive on the year. That turned out to be the right answer. 25.4% of you say you don't trade crypto. I'm guessing if we did this exact poll, in fact, maybe we should revisit this. That number is going to be a lot lower now, given just how hot crypto has been over the past year and just in the last couple of weeks. Look at the numbers I just broke down for this week, listeners. And then heck no, 17.9%. So Dan, our audience, usually pretty precise. And once again, they were spot on, sir. What do you think?
I think you're right. They were right on target. Well done. And with the attention that we're getting in the crypto universe, for it not to be positive going forward would take really a change in perception. And right now, the perception is fairly positive in terms of what we're seeing promoting this complex. So what's interesting too is that nothing has changed. It's not like we have a new method. We have a revolutionary way of utilizing crypto. So its application, its structure, nothing's changed. And but I do think there's some more room to the upside with that complex.
Unfortunately, no more room on the show for this week. Listeners, we'll get out of here with a little fun factoid. We were talking about looking back on the year with Dan earlier in the show, and we get all sorts of data points on our shows throughout the year. And at the end of the year, we get some interesting nuggets, including from Spotify. They sent this over specifically for the Futures Rundown. It was for listeners of this show, what other things you folks listened to on Spotify after you were done listening to the Futures Rundown? Again, a small sample size because this show's only been running for a few months, but intriguing nonetheless. The number 3 genre of music that you folks like is apparently synthwave. So there you go. Number 2, hip hop, and number 1, indie folk. So man, you folks are all over the place when it comes to your musical tastes. And if you're wondering what kind of audiobooks you like to listen to on Spotify, which I didn't know there were audiobooks on Spotify, but apparently there are, what genres you prefer after listening to the Futures Rundown. Your number 2 is science and nature, and your number 1, fiction and literature. So there you go. You learned a little bit about yourself this week as well. And Mr. Dan, if they want to learn a little bit more about the futures markets, maybe check out your videos and everything else you have cooking, where should they go? What should they do?
Well, they could head over to dangramza.com. It's a website I have that looks at the futures markets. These are CME futures. There's a free video that you can look at, and I extract different markets that seem to be moving, and that's done every day. If the market's open, there's a video for it, and you can go back over 10 years and see, all right, what did he say when this happened? And you'll also see some red and green lines. Red means sell, green means buy. These are not buy and sell recommendations, but ideas that I just want to share with you so you can see how that moves and evolves. And if you've never looked at futures, a place to begin is watch them. Gather information just like Mark provides, and this provides what I do, provides a visual thing that you can look at and see what's going on. There's also a course there that talks about the techniques and trade management that I use, and there's a more advanced video which looks at all 22 markets in detail every day. So those are some sources of information you might want to look at.
There you go. Check them out over there. Dan Gramza, GRAMZA.com, the place to go to learn more. You owe it to yourself to check out his videos, listeners. They are very informative. Won't take a ton of time. DanGramza.com. And of course, while you're surfing for futures info online, CTSFutures.com is the place to go to learn more. Tell them we sent you. Get that free trial for a month of their T4 futures and options tool. I think you're going to like it. CTSFutures.com to learn more. That's going to do it for us on the Futures Rundown, this special early edition of the Futures Rundown. But don't worry if you're hanging out in the live. We'll be back in a little bit with, you want a double dose of Dan, you got it. He's tackling a pro Q&A, tackling all of your questions coming up immediately after this show. Tomorrow, of course, you'll get your on-demand version of Options Bootcamp. Dan traveling. I will be at a conference tomorrow as well, so you will be getting the on-demand version that our pro members already heard as we recorded it live last week. Thursday, of course, back live for a double dose of the option block, as well as This Week in Futures Options. Friday, of course, vol views. Then we come back one final time for all of our pro friends over there at theoptionsinsider.com/pro to talk a whole mess of unusual activity on options oddities. And we're back again next week, back at our usual bat time. Another great episode of the Futures Rundown. Stay safe out there, everybody.
Thank you for tuning in to the Futures Rundown, Proudly sponsored by T4 Futures and Options. Experience the T4 Futures and Options trading platform with its seamless desktop and mobile applications, low latency, and professional functionality tailored for traders and brokers alike. Take advantage of T4 Theoretical Sheets, Strategy Solver, MBO, Advanced Charts, and much more. Empower your trading journey with T4 Futures and Options. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.